The federal government's focus on investment and innovation has opened up a new platform allowing individuals access to early stage innovation companies, or ESICS. Stephen Crowe is here today to tell us more about it. Well, hi Stephen, thanks for joining us. We might start by asking, how does a company qualify to actually be an ESIC?
Yeah, thanks Darren for having me. The importance of qualifying as an ESIC is that the investment community then is offered certain financial and tax incentives that are attached to their equity investment into that early stage company.
Right.
So it's very important that that matter is on the table. How a company qualifies is by meeting the prescribed tax tests contained in the tax legislation.
Yep.
So the federal government has, like most financial incentives, created the tax program to influence the control and flow of capital.
Yep.
They are very keen to see a new asset class emerge, and they're using significant financial incentives to enable the flow of capital to influence where companies and individuals are spending their money.
Yeah. Now, ESICs go through certain stages, don't they? Could you tell us a little bit more about that?
Certainly, Darren. So the stages that a company to qualify as an ESIC goes through is that there are a number of different aspects of the tax legislation that need to be met. Mm-hmm. The important thing that I would like to convey is that these tests need to be met on the day of investment, not a day before and not a day later. So it's critically important that the company qualifies at the time of investment by the respective investors. So investors need to be very mindful of that. How that underlying company can qualify is through a number of different avenues. There's an early stage test, there's a 100-point innovation test, and there's a principles-based test. Without wanting to bore you too much on all of those, in essence, what has been created is a framework whereby a company can qualify if it's pre-revenue or not too much revenue, it's not too old, it's an Australian company, because obviously the Australian government's very keen to promote growth out of Australia now.
Yep.
So it needs to be an Australian company, an unlisted company, but it can be a public company. So there's some of the criteria that go into an early stage test. Not too much income, reasonably fresh Australian company, and not too many expenses. Then when we move through to the next qualifying criteria, we look at the innovation test or the principles-based test. The innovation test has a little of prescriptive elements to it. For example, I would describe the innovation test as a reward for companies that have a demonstrated commitment to innovation investment.
Right.
They might have a patent. They might have an R&D tax claim. They might have a participation in a qualified accelerator program. Mm-hmm. So it's more than just an idea. To catch all, though, the government has also provided this principles-based test as I guess effectively it's the last parachute. So if you don't have the demonstrated points under the 100-point innovation test, you can still qualify if you meet the principles-based test. Right. That's a very subjective aspect. There's 5 limbs to that test, Darren, and I haven't met an entrepreneur yet that doesn't think they qualify under each of those tests. Uh-huh. But that's not to say that that's what the legislation might say.
Right, right. So maybe now you can tell us a little bit about ESIC Hub and what role you play in this whole process.
Thank you. So ESIC Hub is Australia's premier early stage advisory and investment firm. We launched on the 30th of June 2016 because the legislation and the program giving effect to this government initiative was actually effected on the 1st of July 2016. We were heavily involved in the design and the consultation program, and then we've basically devoted our business days to helping connect 3 parts of the innovation community. We're seeing 3 parts of the community apply and be affected by this. We've got early stage innovators, researchers, the likes of CSIRO. Mm-hmm. We've got early stage investors. They're high net worth individuals, both from Australia and overseas, as well as retail investors. And the third one are influencing community. They might be, for example, corporate advisors, legal, patent firms, those sort of people who've got clients that are either wanting to invest into projects or are needing capital and want to take advantage of the significant ESIC benefits.
Yep. So if I'm an investor and I'm looking to invest in one of these companies, what's the main attraction for me to do so?
Okay. The main attraction, I would say, Darren, is that the government has provided a process and a structure. I think we all know and have all been exposed to the tap on the shoulder from the neighbour or the people up the road that have got the greatest and newest idea.
Yep.
So what the government has done is recognise that and tried to harness it. And it's tried to harness it knowing that This has been a program that historically people have written a cheque and have seen the money go and not much more.
Right.
That's not a specific comment that's always relevant to this, but it's a general comment. So what we've got now is a generic structure. We've got a process in place and a rigour. And what the government has basically said was, if those neighbours come to you, why wouldn't you ask them to go through this ESIC process? Because effectively, that's going to give you as a prospective investor some comfort about whether you have a 100-point innovation test or a principles-based test, or just an idea that will go nowhere. So what, in essence, the government's provided is a structure and a process to try and regulate and to try and give Australian investors and global investors a better chance at a success.
Yeah. You mentioned tax incentives. What are the tax incentives?
Okay.
They're pretty important.
They are important, Darren, but I think like every tax program, we've seen them all, agri and film and all those ones that have not necessarily delivered on their policy program. I would say this program is very different. So the tax benefits are nice to have. It's like superannuation. We need to provide for our future. Where this asset class sits in a portfolio is very important. Okay, it's clearly a higher risk strategy and it needs to be asset allocation appropriate.
Yeah.
Bearing in mind those benefits, the tax benefits are significant. So what the government provides is two main benefits. So if you're a qualifying investor into an ESIC, you will get a 20% tax rebate off your original investment. So for every $100,000 that you invest into an ESIC, the government will give you a tax rebate. So that's a tax credit, Darren, and that's a $20,000 credit for a wholesale investor.
Yeah.
Retail investors can invest a maximum of $50,000 per year and not a dollar more. But the first benefit, to summarise, is a tax rebate. That's effectively a mechanism the government's giving to get the taxpayer to fund some exposure into hopefully high wealth creating and employment generating opportunities.
Yeah.
The second benefit is any capital gains made referable to those shares in that ESIC are tax-free, in other words, free of capital gains tax in years 1 to 10. That's an unparalleled benefit in Australia, and that benefit can apply to global investors too.
All right, well, there must be some tips and traps that you can possibly recommend for people looking to invest in this area?
Yes, there are. And the first one is that a very detailed knowledge of this space is required to operate in this space, Darren. Tax rulings are a way that people think that a company can qualify.
Yeah.
I'm not sure that I share that same enjoyment. So if investors are looking at this space, I would encourage them very seriously to seek out appropriate ESIC advice from a licensed ESIC professional.
Yeah.
What that will do is ensure that they are presented with appropriate advice, that they are only given an entree to investments that qualify, and that they can then make a choice as to how they feel about those. Asset allocation is also another critically important factor here. It would be remiss of me not to say that it's a high risk area.
Yeah.
People need to go in this with their eyes open.
Yeah.
That being said, it's important that we also understand the alpha benefits that can come with this. And so asset allocation can be a very important way to limit your exposure to too many unsuccessful startups. So what I would suggest is that asset allocation is very important, and a good spread of exposure is necessary. We have access to early stage fund managers that are offering investors those opportunities.
And if someone did invest in an ESIC, what's the length of investment they're probably looking at?
Yeah. So given the nature of this, it's an early stage pre-revenue style of business. The 100-point innovation test is indicating a demonstrated history of investment in innovation versus the principles-based test, which is more not tangibly related. So I guess if you take a view on each of those two buckets of eligibility, you might find different maturities. So on the 100-point innovation test, for example, I would tend to indicate that a lot of the heavy lifting generally has already been done. That's not to say there won't be more money spent on IP creation, but generally there's been more money spent and money has already been raised. You'd like to think that that's going to get to market quicker. On the principles-based test, that really does depend on a company's ability to scale and take advantage of a sustainable opportunity that we've identified. Irrespective of whether a company fits into either of those buckets, there is no limit in relation to how long an investor can hold this asset. So an exit strategy clearly will depend upon the management's capability to drive value in this business, and that might be a value that ends up in a liquidity event either involving a trade sale, an IPO, or a nice flow of sustainable franked dividends. So you would generally think it's a bit more of a patient investment, because it's an unlisted investment.
Great, thanks, Stephen. If you like what you've heard or would like to find out a little bit more about ESIC Hub, ESIC Hub will be presenting on the Financial Observer Undiscovered Managers Showcase. That's an event to be held on the 23rd of October in Melbourne and the 25th of October in Sydney. If you want to find out a little bit more about this event or would actually like to register for the event, please visit the website that you can see on screen now. Thanks again for your time, Stephen.
Thank you, Darren.